Hey guys, what's up? Stock Retail coming back to you Thursday, September 14th. Boy, I'm seeing a whole lot of discussion all over the interwebs about the 40 million share dilution being done, the cash Adam has brought into the company, the let's say the strength that that gives the company, the amount that that will help us fight the short thesis. A lot of good things, but there's also a lot of discussion on bonds right now. I covered bonds a couple times this week. Boy, if that conversation hasn't even just continued to ramp up. So I'm going to cover a little more today. In particular, there's a lot of discussion on did he pay off bonds? Are we going to see dividends? Some things like that. So I'm going to cover that today. And I just want to show you, I'm not going to be able to tell you what happened because, first off, he hasn't filed anything, right? And so if you were with me for a while, you've seen a video where I gave the DD oath, the APE DD oath. And one of the things I said is, look, if it doesn't come from Adam, doesn't come from John Merriweather in investor relations, or doesn't come from Sean Goodman, the CFO, if it doesn't come from an SEC filing, then it's all speculation, right? So that the APE DD oath is if it doesn't come from those things, I'm not spreading it all over the place. It's great to talk about speculation sometimes. Heck, I do it. But generally, it's not DD if it's not from a filing or from Adam's mouth, is basically what I'm saying. So I'm going to show you a little DD today, which means we're going to get it straight from filings. And then I'm going to give a little bit of my own point of view, and we'll separate what's point of view from what is fact. And then we'll talk a little bit about cooking up something good. I'm going to make that make sense. We'll get to that. So first off, you can go to their most recent financial filings, the Q2 2023. I do this every quarter. If you've been around a little bit on this channel, then you know by now I have a spreadsheet where I've tracked all the way from 2018 till now, basically every single quarter's financial filings. So I just religiously, every time these things get filed, I go at them. So that's how I knew, for example, before they even announced that debt was lower than pre-COVID, I had seen that in the spreadsheets that I have. And so I had told you guys. And then sure enough, I think that was the Q1 earnings. They came out and kind of shared that too. And then I've continued to share with you guys that there are certain expenses that are lower than pre-COVID. So I get that from tracking these financial filings. The reason I'm sharing that is you can go get this. You don't have to trust me, bro. You don't have to have a YouTube channel. You don't have to have someone on Twitter tell you. Nobody on what else? Reddit, etc. You can go get this stuff straight for yourself. I get that perhaps I'm saving you some time sometimes, but it's just really good to get informed because when you're informed, you can't be misled. So that's why this channel I keep mostly to things that I can source and show you. So let's actually go through this because you're hearing people say, hey, Adam paid off enough of the bonds that we're going to get dividends. So we need to kind of unpack that and understand what is actually known versus what is speculation. So first off, why are we talking about bonds and dividends and you're going to hear something else called covenants? Well, if you've been around long enough, you probably know, but just in case, let's just make sure everyone's on the same page here. There are bonds that AMC has that have what's called covenants over them. And it's basically like if I, for my house, go get a loan, the bank has the right to tell me if I'm signing up on the dotted line, I'm signing my name to that loan, the bank can put covenants on that and say, well, you cannot do certain things, you can do other things. Like I'm sure the bank is not going to just let me tear down my house and build a parking lot here. There's a covenant that says there are restrictions to what you can do with that property. Well, the same thing with AMC's debt with some of the banks that, they went and got this debt. It was basically rescue debt, but some could even call it basically restrictive debt during the height of COVID. And so there are some banks who basically said, all right, listen, we're going to be here for you. We're going to front you this money, but you are a really risky business right now. We don't know when your doors are opening back up. So we're going to put these restrictions on this, in case you go bankrupt. That's part of the discussion with bonds as well. I did a whole video, I can't even remember now yesterday, guys, or what day it was. I think it was yesterday, whatever day it was this week, where I talked about bonds a little more in detail. And I told you that bondholders are a little bit more at the front of the line if a company ever goes bankrupt. So that would be the pro for a bank. They give this debt to a company. It's like if with my house, if a bank forecloses on my house, it's their house now. That is why a lot of us, are very glad that Adam never took any deals to take AMC bankrupt because stockholders are at the back of the line. You pretty much get nothing. Bondholders would have taken over the company. And so you've heard him say that he, as far as he is concerned, he's not letting this thing go bankrupt. He's actually protecting us. That's something else you need to understand because you get fudded a lot. He had plenty of opportunities for this thing to go bankrupt in 2020 and 2021 and even, yes, 2022, and he has not allowed that to happen. So that's just something I personally don't even listen to. If you're going to come around trying to talk about that, then I'm going to point you to the scoreboard, which we're actually going to do in this video. I'm going to have a scoreboard. All right, so the bonds, though, it was a risky time. AMC went to banks, basically hat in hand is kind of the saying, looking for help. They got that help. Awesome. I think that's really great, but it came with some restrictions. And you guys know by now those restrictions involve can't pay dividends unless you meet certain criteria. So there's some cash flow criteria, some profit criteria. I don't, here's where I'm going to have to say, even I don't fully know because I haven't myself gotten my hands on those covenants. I'm trying to, and I'll read them and maybe, again, source and screenshot those for you guys if I ever get a hold of them. But I don't know. Some apes talk about, those need to be paid off before we can pay dividends. Some apes think that it's just a certain cash flow level or profitability level that then gets rid of those. By the way, you'll also see once a year on the earnings, there's kind of a check that AMC does. It's a liquidity check that basically allows them to kind of push the covenants out another year too. There's certain things that would kick in if AMC didn't have enough liquidity. So if you don't know, we're going to talk today a little bit about how much do we as apes know and how much does Adam and the team know. But there also are certain levels of cash. If they dip below those, there's new restrictions that kick in and make it even tougher on them. The bank was not, banks aren't in the habit of giving charity, right? And banks can be pretty darn tough. In fact, some might even call them sharks in some cases, right? And sharks don't just let the fish swim around and do whatever they want to do sometimes. So you need to understand there are times you might be like, why the heck did we sell shares now? And Adam and Sean and the team know, like, hey, we need to make sure we don't let some of these provisions kick in. They're, taking defensive moves sometimes too. Love that they're generally on the offense these days, but sometimes there is some defense to play. That's another thing you might not have known. You can watch for those announcements once a year. You can go find those in the past where they say, hey, we did basically the liquidity check and we passed, so we get another year. Okay, so that matters too. All right, let's finally look at all these bonds. So what you'll notice, I want to just kind of walk you through this and then I'm going to show you a simpler view. You would find this if you scroll way down. I want to say on the last earnings report, it was like page 71 or something. You'd have to scroll way through the documents. But here you get, so here's a senior secured note, credit facility term loan actually. You can see 7.25%, or kind of call it 7.3%. That is due 2026. So you can see when is it due. There's actually part of it. There's different rates. So you can see the rates, the timing on those. You can see when it's due, and then you can see the amount. Okay, and then you could even see, hey, last year we had this, and you notice they had paid off about 10 million of that. You can see the Odeon debt that was refinanced, I think about a year ago now. If you might remember that, and so you can see that's due 2027. That's at about 13%, and that is at $400 million. So you can just kind of start adding all these up, and if you were to do like a weighted average, you could figure out the interest payments of all of these, and then the blended interest of all of it combined as well. So then you can see we have about $1 billion that's at kind of, this is one of the highest ones. A couple different interest rates on parts of it. This PIK means payment in kind, so cash/payment in kind. Notice too, you start to see senior secured, first lien, second lien, subordinated. These are all identifiers for the type of debt, and in some ways sort of who's at the front of the line. That matters because I have personally assumed basically the front of the line, I believe, is these senior secured term loans here, the ones due 2026. And so that was what triggered me to kind of just remind us all of the data, because I saw some apes kind of saying, hey, some apes were even saying they paid off all the bonds. And I'm like, no, guys, these are all the bonds. You got to look through all these rows and look at how that adds up to 4.8 billion. Our number currently is a little lower than this, by the way. If you recall, they paid off some debt in July. These are the Q2 results that are as of the end of June. So any of that debt they've paid off in July or since doesn't show up on this page. So I've got that in my own little spreadsheet as well, where I've kind of corrected for some of that. But anyway, you notice we have $4.8 billion of bonds. Well, how much cash did we just bring in? We brought in 325 million. So you know right off the bat, they didn't pay off all the bonds. We have a lot of bonds out there. All of these lines are basically bonds. I guess you could kind of get into some nuance between the lines there, but this is all the debt. And so I think it's really important to just note all of it. And then also, like I said, kind of the sequence or the order of things. And you can just hear it, like a senior secured is more than a subordinated, or in front of a subordinated. It's kind of like if you got a second mortgage on your house, there's like a first lien and a second lien. So you also see some of that language in here, second lien, some stuff like that, subordinated notes. So the reason I'm looking at that is generally I believe this senior secured credit facility, this 2026 amount, that's probably what's at the front of the line that has the restrictions. But notice that word believe. I don't actually know. Those restrictions could be on something else. Maybe it was the second lien. I believe it is on the 2026 debt. And again, there's that word believe. So we're going to find out. There were some Twitter apes, one in particular, who kind of said, hey, I've actually read the covenants. Until he posts sources of that, that's a trust me, bro. And I'm just not in that place until I see it either sourced or I hear it from Adam. So let's move forward with a kind of a simpler view. These are all those rows. And what I want you to just see is to start to ground yourself in some scenarios I'm going to go through. I've talked to you guys a little bit in the past about how we could save on interest payments, for example. So take a look at this. Did you know, for example, there's already $5 million due next year. So you can see this $5 million. I've kind of sorted it this time by year and then by interest rate and some of that stuff. So there's $5 million. They're paying about 6.4% interest on those. So you kind of got your yearly payments on that. The interest payment on those. I kind of could have called these by some more clear names. This is just a screenshot from some of what I've got in my spreadsheet. You can see how much they pay per quarter then, and then the maturity, so when those are due. So they've got some senior subordinated notes that are due next year. Now that's only $5 million. So that's honestly kind of a nothing. I'm not really paying much attention to those. He'll decide when it's the right time to pay those off. I'm just not really thinking about that. So the real first time that any real debt is due is not till 2025. So that first ground yourself in that. When the shorts are trying to tell you that AMC is going to go bankrupt, you remember that at the end of Q2, we finished with about $700 million of kind of current liquidity. So there's some credit facilities, and they had, $400+ million in cash. And then you've got some things like accounts receivable. So it was something like $700+ million of, let's call it liquidity, cash they can get their hands on quickly. Then they just brought in this $325 million. Plus, I believe we're having a profitable quarter. Let's find out when earnings come out. Bottom line earnings doesn't have to, it's not always the same as cash flow. So we're going to find out how is the cash flow this quarter. I do believe we're probably right on the edge of positive cash flow again this quarter. So let's just say they're either adding to the bank account, or they're not burning very much this quarter. That you heard the word believe there, right? That's a forecast. So that is not DD. Shucks. Sorry guys, you're gonna have to wait on this. See if I'll just let that run. You're getting a screen recording of my computer trying to check some stuff. Okay, so you see that there's almost $100 million due in 2025. So I was just talking about all the liquidity before I derailed myself there. And sorry, regathering my thoughts for a second. All right, so if we have like $1 billion of liquidity, let's say, then there's only $100 million due in 2025. So you can just hear right there, even if there was some cash burn, even if we had some tough quarters because of, the strike or a revisit of a pandemic or something, gosh, knock on wood, and I know some of us are going to push real hard to not have lockdowns again, but that's a whole other conversation this channel is not about. But let's say just even in some kind of weird worst case scenario, you're only having to pay this $100 million in 2025. Nothing else is due until 2026, and they're sitting on, let's call it like $1 billion of liquidity right now. And that's without refinancing anything, right? So let's say between now and 2026, 3 years from now, they have time to go to the bank and say, all right, we've kind of righted the ship, we fixed our company, we've survived. Remember, Adam keeps talking about survive, then thrive. If we when we survive and get to the thrive part, they can go to the bank and just say, hey, we want to refinance this. We're a much stronger company now. Let's rework this loan. They can find a bank who's willing to do that because they'll probably be in a far healthier place. I believe that. And, the past, while the past doesn't guarantee future results, we know that, right? Past performance doesn't guarantee future results. But they have a track record of paying down debt, fixing the balance sheet, making things healthier while the industry is recovering. I've done enough videos about that. If you've been around, you've seen me source that with facts as well. So if they're turning profitable and they don't really have any concerns, you can see in 2026, there starts to be a lot, right? It's these next three rows, this 50 million, this basically 2 billion, and this 1 billion. That's all due in 2026. But again, that's almost 3 years from now, right? They could probably refinance between now and then. I had said that, by the way, back in 2021. I said it again in 2022. Both times I got trolled a lot on Twitter. And then I ended up being right. They refinance. So, for example, this Odeon, where did it go? Shoot, I didn't show that on here. Oh, yeah, I did. Here we go. This Odeon debt was a refinance. It was due sooner, and they refinanced it. And by the way, they actually got a fairly favorable deal on that when they refinanced it. It was the interest rate wasn't awesome, you can see there, but the amount kind of got adjusted. So there's been a lot of good moves. I guess what I'm really trying to say is effectively you could look at this and know between now and 2026, they only have this $103 million due. Well, they're already sitting on way more than enough for that. So shorts have to sit here and go, I know for sure they're not going bankrupt until at least 2026. And you guys know my point of view that we're going to have enough positive earnings that that's not even an issue. Not to mention that Adam still has a whole bunch of shares in his quiver that he can shoot those arrows if he needs them. So right away you should know anytime anybody talks about AMC going under, it's a bunch of BS, frankly, because where do you think the popcorn business, the candy business, the gold mining business, and this new, business line of distribution of concerts is going to be in 3 years? You give this guy 3 years time to grow those, and you give the movie industry 3 years time to come back. I already showed you in a recent video how they made the same revenues as 2018 compared to Q3 2018. They made the same revenues on half the movies. If we've got 3 years for the movie industry to get its act together, no pun intended, anyway, you can just hear 3 years is a heck of a lot of time. So Runway, by the way, you could even find, I wrote whole Reddit articles on this in 2021, and I just said it's about a runway. If AMC has the runway to build to profits, the shorts will lose. And that is what this has all been about. Some of you are really fixated on what price did he sell stock at. Guys, it's about a runway. The shorts have been trying to end this company on a ticking clock. Why do you think people say tick-tock, Shorty? Shorty can't stay liquid forever, and what's more, they're not going to enjoy waiting years upon years, bleeding out, while this company is getting more and more strong, more and more profitable. Okay, so it's about a runway, and what I'm telling you now is without even blinking an eye, in my opinion, there's that word opinion, there's not even an issue till 2026. So now Adam's got the next 2.5 plus years to continue strengthening this company and to watch the industry strengthen. And I've shown you in plenty of videos how they're set up to be more profitable than pre-COVID. And there's going to be plenty of banks who are going to say, hey, if you need to refinance, I like making money, I'll do a deal with you. Or he'll even just have the opportunity to pay it off. Okay? So that's the first thing you need to know. Actually, two things really. If you're seeing people talk about everything's paid off, no way. You see that there's way too much debt. They didn't pay everything off. Don't buy into that. But you also hear how bullish I am that one, there's plenty of runway, and then two, let's talk through some scenarios of what he might be doing with that cash. Now, you've heard him talk about risk. You've also heard me talk about, so I just want to set up a couple bits of context so that we understand these scenarios. So Adam's talked about risk. That means if he's thinking about the strike, if he's thinking about possible, health scares, he's thinking about keeping some cash on hand to manage through some storms, right? So that's just normal and that's good leadership. In the meantime, I have told you that 8 out of the last 10 quarters, AMC has paid off debt at significant discounts. Those have been anywhere from like 32 to even like 52+% discounts on paying off the debt. And I've shared with you a lot that banks are thirsty for cash. And so if you go to a bank and say, I'll give you some cash, will you give me a discount on paying off this debt? They're like, yes, awesome, let's do this. Okay. And then there's even just math on the fact that you're getting cash now and not having to wait a few years for it. You get into some financial terms there. I've talked to you guys about the time value of money. So knowing that 8 out of the last 10 quarters, they've gotten this big discount. So I'm using history here and not some kind of hopium. And then knowing also that he may not use all of it to pay off debt. Now let's look at these scenarios. So the first is, let's say you're the leader of this company and you go, all right, I just kind of talked this through. I'm going to go ahead, I've got this cash on hand. Why don't I go ahead and save on the interest payments? I'll pay off a piece of this now. Just think kind of, if any of you have ever heard of like Dave Ramsey or something, you just start snowballing. You pay off stuff that's costing you money, and then you start having better cash flows, and now you use those cash flows, boy, that came out weird, those cash flows to pay off more, and now you're saving more, and now you use that to pay off more, and you kind of snowball your way out of debt. Well, he's got an opportunity here to effectively Dave Ramsey AMC. By the way, I'm not pumping Dave Ramsey. I'm just trying to share something I know a lot of you would have heard of. I've never actually done that myself. I just get the concept of snowballing by getting rid of your highest interest first, but we're going to talk about that in a minute, those kinds of things. All right, so he could say, here's a scenario. I'm going to go ahead and basically make the world know that we don't have any problems until at least 2026. It puts a real strong foot forward. He pays off the 24 and 25 debt that I just showed you. Sorry, let me just look at one thing real quick. Oh, yeah, okay. So I'm showing you with a discount and without a discount. Sorry, that $70 million number threw me off for a second because, as you can see, I know it's $103 million of debt. So that's why I wanted to go back and check. Sometimes you got to check yourself, right? All right, so if they get that discount on the 24 and 25 debt, then you can see, let me hover so you know where I'm at. I'm right here. So this is that $70 million it would cost them. You get the discount, so it only costs 70, but you pay off 103. I'll just tell you now, personal opinion, I don't think they would get such a big discount on debt that's due soon. Again, back to this time value of money concept, I don't think a bank is going to necessarily say, well, you were going to pay this 6 months from now and I'm going to cut a third of it out. A bank's probably just waiting for that. If that was the $5 million number in 24, for example. So I'm just going to tell you right now, if they do this scenario where they keep most of the cash and they just pay off 24 and 25, they're probably not getting all of this discount. But let's just say basically even at, I kind of showed the lower number. Actually, I think I showed the higher number here. But let's just call it, they're going to get like $1 million a quarter in interest savings. Let's take some of that discount out. Sorry, no, I'm not on my A game today, guys. Sorry about that. The reason I didn't show this one with discount is with or without the discount, you're paying off the same debt, that $103 million, and you're saving the same interest either way. They're going to save that $1.5 million of interest a quarter. That goes away. You wipe that off of your quarterly results. So if they just pay off the 24 and 25 debt, they're going to save $1.5 million a quarter. You're going to see that straight to the bottom line. That's going to go into their earnings. So remember last quarter we had like 8 million positive earnings. That would have been 9.5 million without these payments. So that's awesome. And then you know that there's no debt due until 26. So that's one scenario. He could keep most of the money he just brought in, and he could basically say, hey, we don't have any debt until 2026 other than the interest payments. Okay, he could do the same thing, focus on the 24 and 25 debt, but use all of his cash and pay a little more from 2026. Now I looked at kind of, if you're doing that, so if your kind of leftover cash is paying some 26 debt, then you're probably doing it on the higher interest rate. So if you kind of blend all of that, you would be saving, if you get the discount, you're effectively going to save, you see this top line here where I'm saying with the discount, they'd pay off $478 million of debt. I covered that in the last video too. And you'd be saving $11 million a quarter. So imagine last quarter we had an $8 million positive earnings. You would more than double that. We would have had another $11 million added on top of that. We would have had a $19 million quarter. So just imagine what that starts to look like every quarter, quarter in and quarter out. If he gets the discount, we're saving $11 million. That's cash staying in the company, staying in our stock. Even if he doesn't get the discount, kind of giving you a worst case scenario, so you got a range. Effectively, we're saving $7 million a quarter. So practically double last quarter's earnings. We go from the 8 to the 15 or something like that. And then the first, actually wipe this, ignore the bottom line on this one. Sorry guys, sometimes I throw these together at the end of a long work day for you. And so you can hear me just running a little hot this week, kind of stammered a little more than usual, but that's okay. The facts will keep us straight. These are our guardrails. That's why we use facts and not trust me bros. So ignore this one. The first debt would actually be due in 2026 because you've wiped out the 25 debt. It's basically the first scenario plus paying off some 26. Let's say instead of that, he doesn't think about the timeline. He just says, I just want to reduce my interest payments and get rid of the most expensive debt, the highest interest rate debt. Again, it would take all the 325 cash. He wouldn't be holding back any of that. He'd pay off 478 million if you want to figure the discount, or he'd pay off 325 without the discount. So in this case, the interest savings would be 15 million bucks a quarter. Or if you don't want to assume he gets a discount, the interest savings is 10 million bucks a quarter. So that's your range. If he says I'm going to pay off all the high interest debt, I'm saving 10 to 15 million bucks a quarter. And then, man, I don't know why I said the first. Oh yeah, in this scenario, yes, you do have that 2025 amount, because what you're doing is none of the 2025 amount was that high interest rate. Let's go back. I'll just show that to you. So effectively, you've got this Odeon amount. That's kind of the highest interest rate. I called this line here 11%. I just took an average. So it's that 10, 12% cash payment in kind. It gets a little wonky. And I told you before, actually, just either way, I'm using an 11% number there is what you can see. So basically you pay off this 400, maybe you pay off some of this 1.1 billion. That gets you to this 10 to 15 million dollars a quarter in interest savings. So again, go back to that last quarter, or take any quarter, like let's say there was a quarter that would have been a -5 on earnings. Now you add in 10 to 15. Well, now you're a +5 to a +10. So just think about quarter after quarter, year after year, now adding all of that money back into our company, making them stronger over time. And he's building up kind of the coffers, building up the war chest, or using it as we go. So it's a big, big deal. And that's why, some of you have asked, why am I excited if he sold at these prices? It's because, one, he absolutely has the money now to buy the runway and defeat the shorts. Do you want to defeat the shorts or not? Would you rather the guy sat on his thumbs and the shorts could sit there and point to the debt that's coming up and we're still burning cash on interest? I am pleased that he has the opportunity, one, to manage risk, and two, to pay off debt and make our company stronger. That is why I'm excited. I can't control Wall Street manipulating our stock, right? I'm not going to sit here and say that I can control that, and neither am I going to say that he can control that. I've covered that on a lot of videos. You've got my point of view clearly on that. So I'm just not wasting time on people. I'm just going to say what I really think. Whining and or fudding, right? Like, I'm not wasting my time on that. I'm looking forward. I can see the pathway of what he's doing, and I'm on board. I'm riding with him. That's not water carrying. That's not fanboying. That's me caring about my stock and being glad that my company is getting stronger. That is why I'm excited. So here are the considerations I think he's looking at. There's a lot more, I'm sure, that I'm unaware of. So he's thinking about risk management. We talked about that. If you're kind of leaning towards risk management, you're keeping a little more cash in your pocket, right? You're just saying, I might need this. I'm thinking about the strike. I'm thinking about pandemic, those kinds of things. He could be thinking about time management. So that's that scenario where he's paying off the soonest debt. You're sending a signal to the entire market and to the shorts. You guys are going to have to sit around and wait 3 years, and in that time, I'm going to be making this company stronger, so good luck. That's a pretty dang good signal, even if he just does that, right? You could be thinking about cash flow management. So that's where you pay off the higher interest rate. And I showed you, you're maybe saving anywhere from 10 to $15 million a quarter. On that one, I'd have a lot more confidence if he just attacks the high interest rates. Those are farther out. He's probably going to get those discounts. So that's why here I'm saying maybe he gets the 15 million bucks a quarter. That's 60 million bucks a year savings. Remember, savings goes straight to the bottom line. All right, or he could think about a blended scenario. Maybe he saves some cash and he buys us that time, or he saves some cash and he knocks down the interest payments a little bit. So you're going to probably see any of those. Any of these four is what you're going to see. All right, so before I kind of go to the next thing, let's just set it up. So there's a lot of people talking about, whether he should or should not have sold shares right now. I've just covered why I'm excited about that. And then, of course, we're going to have to wait and see, is he paying off any of those bonds that have the covenants for the dividends? If you don't know, basically, shorts are on the hook for passing dividends through. So if they have shorted more shares than should exist, they're going to owe some cash. That's a big deal. That puts a lot of pressure on the short positions. That's why people are excited about dividends. There's that thesis in a nutshell. But so there's a lot of people saying, why did he do this now? And I've said, for me, I'm excited because he's making the company strong. He's killing the short thesis. He's buying us time. He's managing risk. Perhaps he's clearing the way for dividends. I don't know. We're going to have to find that out. So here's my question. If you're questioning him, I got a few questions for you, and I want you to just be introspective. You don't owe me an answer to these questions. I don't know you. We may or may not ever meet. You don't owe me a darn thing. But, if you want to live a good life, you hold yourself accountable to growth. That's my opinion. So if you want to grow, you ask yourself some questions too. You don't just ask questions of others. You look a little bit inward and say, okay, let me check myself a little bit. So I'm going to check myself, and I ask you to check yourself. First question, were you here in 2021? Second question, did you vote yes or no to shares in 2021? Because any of you, let me not say this as much pointing the finger, any of the apes in general who voted no to him having shares in 2021, along with some really big influencers who told you to vote no, those shares he could have sold at like $500 equivalent of what we are now. I need to go look at a chart and get the right number. That's not a fact that I just stated. That's just me kind of making that up a little bit based on memory. But somewhere in the hundreds, it would be the equivalent. He could have diluted in the hundreds, and some of you voted no to that. And now you're asking, why did he sell now? Because you told him he couldn't then. Plain and simple. You voted no. He's beholden to his shareholders. That's how this works, guys. So if you voted no in 2021 when he could have sold in what's now the hundreds, and now you're sitting here pointing the finger at him, that fails the logic test, okay? You're not taking personal accountability for your own choices. You chose to say, I'm all about the squeeze, and you didn't think through that the squeeze needs the business. Shorts stick around if they think they can kill the business. We've got to kill the short thesis by making the business strong. That's been my opinion for a very long time, and I've shared it plenty. There's a lot of receipts on that. Okay, so that's the first question. First two questions. Were you here in 2021, and what did you vote then? Because if you voted no, then honestly, just stop. Stop it. It's not his fault you voted no. Okay? Next question. Were you thrilled when Ape was getting attacked? And did you say, why didn't he sell at higher prices? You think he didn't hear all that? While we're sitting here getting attacked this time? What if he doesn't sell and we're down at 4? And then you guys are all saying, why didn't he sell back at 8? Only now he sold at 8, and you're saying, why did he sell at 8? That is so much backseat driving and questioning the guy in charge. So here's my final question to you. Have you run 4 previous companies? And have you done it well? If you can't answer yes to that question, I'm not sure you're in a position to question the guy. Have you managed, I'm going to go through this list. This is what it takes to run his company. E-commerce. Have you managed that? Have you managed property management and real estate procurement and then actually the function of procurement? Getting every supply the company needs? Have you run an entire supply chain? Have you run a merchandising organization? Have you run financial planning and analysis? That's called FP&A. Have you run the corporate controlling function? That's accounting. That's why it says corporate accounting there. Have you run investor relations? Have you run a food and beverage company? Have you run human resources? IT? Strategic planning? Content distribution, which he's created? Celebrity partnerships? Studio partnerships? Have you run legal, tax, hospitality, banking? Equity markets? There's a few of these things that I have led, but boy, I've never led this whole list. Let me clarify where I'm going here, because I'm sure some of you are saying, hey, hang on, I'm not going to blindly trust the guy. And you're right. Let me say that again. If you're saying I'm not going to blindly trust the guy, you're right. Don't blindly trust him. And I've told you not to blindly trust me. But there's a difference between getting on Twitter and YouTube and Reddit and Facebook and having nothing but negative things to say all day, every day. There's a difference between that and actually reasonable, logical, constructive questions, right? I have reasonable, logical, constructive questions. I send them to John Merriweather sometimes. I DM Adam sometimes. Sometimes I'll even share them publicly. But what's the end goal here for you? For me, it's retail winning. So ask yourself, how does retail win? Does retail win by picking at your own company? I've said in other videos, no one has ever attacked their own investment in the history of man, as far as I'm concerned. You don't attack your own investment. You seek to build it up. You seek to make it strong. So that's going to be what I'm going to be. If you don't like that, this isn't the channel for you. I want this company strong. I want myself and my fellow retail shareholders to win. I want us to defeat corruption in Wall Street. I want us to defeat the people who I keep saying are taking food off of tables and clothes off of backs. And I'm not going to do that by tearing my own company down. That's ridiculous. And I have the humility to look at this list and say, I have not managed all of this. There are things this guy knows that I don't know. So come up with ideas. That is awesome. That's constructive. Suggest ideas. Think about new ways that we can grow. He has taken some of our ideas. But that is also different than constant whining and questioning and demanding of the guy. And what's more, let's think about, do you want 3.8 million chefs in the kitchen? Can you imagine the chaos? So, sorry, that's a little bit less positive than I like to be on this channel. I'm just giving you a point of view that this idea of all of us telling him what to do is very different than all of us partnering and offering creative ideas for us to win together. So that's my approach. I love the AMC Ideas group. I love the AMC Guerrillas movement. I'm sure there are others I should be calling out that I'm either not thinking of or just unaware of. I love that there are people who are doing DD, trying to highlight fraud and manipulation on Wall Street. These are all good things. These are constructive things. So, I don't know. Enough about that. Let's just look at the scoreboard, and this will kind of answer the question of retail, why do you support this guy so much? Okay, first off, if you're newer to this channel, please understand, so forgive me for those of you who've been around a while, you probably know what I'm about to say because I've said it, in my opinion, too much, but I keep seeing new followers, and so I've got to bring them up to speed. I have 2 master's degrees in business. I worked at a Dow Jones company. That means one of the top 30, basically, companies in the world. I worked there for 21 years. I led teams that managed 9 categories across 15 countries, and it was more than $2 billion a year in revenue. Now, I didn't lead those whole businesses. I led the teams forecasting and planning and managing inventory and deciding how the supply chain should run and some of that kind of stuff. But you can just hear that's sizable. That's not tiny. So I've come from the corporate business world, and I understand a few things. And even I still then couch that with humility to say, boy, there's a lot I don't know. There's a lot I haven't experienced. There's a lot I haven't done. When you have humility, you can see your own strengths appropriately, but you can also see your gaps and your blind spots and learn to trust someone who has strengths where your blind spots are. That's what I'm doing. And then I'm just trying to bring education to you guys because I come from the corporate world and I have some business training and some understanding of what it's going to take for us to win. So I can kind of look at the numbers and say, are we winning or not? That's basically what I keep doing for myself and for you. So I'm looking at the scoreboard and going, all right, last quarter we had profits. He did that on half the movies of 2018. And I showed you that in 2018, that was actually a negative earnings quarter, that Q3 2018. We have half the movies, and yet we've achieved profits. Okay, I think he's doing a good job leading the business. Do you understand that he had to trim the properties to do that? So he had to decide to make some really hard decisions to say, we're cutting loose some properties. That's one of the reasons rent is lower now than pre-COVID. Their operating expenses as a percent of revenue are lower now than pre-COVID. I showed you that in the last video. They're more efficient now than pre-COVID. That's a good operator. Sometimes people call a CEO or a business leader an operator. Are they running the business well? He's right-sized expenses to the point that we got profits on half of the product line, half of the movies, and we got profits. That's good leadership. That's on the scoreboard. That's why I count that. All right, debt. I've shown you that debt is lower than pre-COVID. He's managing the debt. And guys, just say out loud for a second. They had an entire period of time with zero revenues while they still owned these properties, so they still had expenses. You run a business and shut it down for a while and see if you survive. And by the way, he fought for that survival before most of us were here. That was 2020. Did you own AMC stock then? Some of you did, and that's awesome. I applaud you that you've been around that long. But there's plenty of us who didn't show up until kind of January 21-ish. He was out there keeping this company alive before we even showed up. And now, even having gone through that, debt is lower than pre-COVID. All right, that's one on the scoreboard. We're invested in a gold and silver mine. I cannot tell you how excited I am for what that looks like in the next 1, 3, 5, and 10 years. I think the man was a visionary. I think he knew what he was doing there. I think he also saved another company that was being predatory shorted. That's not over. I've watched the price of Hycroft ever since we bought in. But the fact that it's not over also means I believe we're going to win. I'm glad we're invested in that company. I'm putting that on the scoreboard for him. He created the entire popcorn business, which is in almost 3,000 doors now. We still have to order our microwave popcorn online. It's not even in our door. And then the bags, it's hit and miss. Sometimes they're there, sometimes they're not. Apes keep gobbling that up, but it's more than apes now. He's going to be gaining market share. He's told us that may be a $100 million revenue business in a few years' time. We know that any day now we're going to get announcements that's in hundreds or maybe even thousands new doors. That's on the scoreboard. He did that. That's under his leadership. Can't take that away from him. We know candy's coming. That's under his leadership. I don't know about that wine tweet today. I'm not sure why he deleted that. If you haven't seen that one, probably floating around. That was interesting too. We may have AMC wine here pretty soon. I think that sounds fun. I'd have a glass of it with my wife or something like that. Maybe after MOAS, I'll toss a glass back with some of you guys. That's on the scoreboard. He has made AMC a distributor now. That did not exist before his leadership. Name for me another movie theater right now that is a distributor, making money off of their competitors. Answer, you cannot. So if he's the only leader in the industry who's done that, doesn't that mean he's a leader in the industry? Who do you want leading your company? A leader or a follower? That's on the scoreboard. Do I have to say more about the last one here? That's on the scoreboard. The man has done all of these things. He's managing the business well. He's managing real estate well. He's managing expenses. He's managing relationships with the banks. He's managing relationships with Walmart, relationships with Taylor Swift and her family, now relationships with his competitors, relationships with manufacturing. Do you understand what it takes to ramp up millions of bags of popcorn? You cannot convince me he's not leading well. You just can't. Don't even bother trying. It's a waste of your breath. It's okay if you disagree with me. There's room in the world for disagreement, but I'm telling you, I'm not hearing it because I'm looking at this scoreboard and I'm just continuing to say he's leading well. So I'm going to let the man cook. And so far, I think he's been cooking up a haunting for the shorts. Let's go.